Hello, and may I wish you all a very happy new year from everyone at Casterbridge. This is just a short video just to give you an update on our thoughts for 2022. And I think if we look back at the global economy over the last 12 months and what it experienced, whether it's in terms of the spread of the virus, the impact on many sectors of the world economy, or for example, the sharp rise in inflation which we saw towards the end of the year, I think perhaps many of us would be surprised how well equity markets, risk assets did perform over last year. So, for example, if we just in the US, if we take the broader S&P 500, that was up 26%. You've got the tech heavy Nasdaq, that was up 21%. The FTSE 100 in the UK, that was up 14%. And actually, emerging markets were slightly down, over the 12 months. But I think it's quite interesting to dig a little bit deeper into the Nasdaq. And some data we've had from some US fund managers which we use. If you take the peak in around sort of mid-February to the end of the year, we did start seeing quite a significant divergence between the top 5 or 6 companies and the rest of the market. So over that period, from the middle of February to the end of the year, the Nasdaq itself was up 12%. The average Nasdaq stock was down 15%, but those sort of top leading companies, they were actually up 39%. So those top companies include, the Facebook, Amazon, Nvidia, Google, Apple, and Microsoft. So I think that shows that the impact on the virus on certain sectors of the economy has actually accelerated a lot of change. So actually, some of these companies have actually done rather well out of this virus. But let's look ahead into 2022. At a high level, I think we should see further sort of positive news with regards to the sort of diminishing effect of the virus, and that will give greater clarity to companies as they're looking ahead, over this year and into next. I think before I just get into the areas where we're sort of most positive, I think perhaps worth just mentioning a couple of areas of potential concern, which might lead to some greater volatility over the coming months. The first area would be inflation. I have been concerned over recent months, that inflation does stay sort of higher for longer, stays more sticky than perhaps many people, many strategists believe. So I think the key question is going to be, how quickly does inflation come back over the next few months? Does it settle back at around sort of 2-3%, or stay a little bit more sticky at around sort of 4%? Because that will have a big impact in terms of what central banks do and how quickly and how aggressively they do increase interest rates. And I think the other area of concern, maybe is on sort of geopolitically, for example, particularly around, in Eastern Europe. We're seeing some rising tensions between sort of NATO and Russia just in recent weeks. Let's hope that doesn't escalate. But it's something else which perhaps we just need to keep a bit of an eye on. So I think we shouldn't be too surprised if equities become a little bit more choppy, over the next few months, particularly bearing in mind how far, how strongly they have performed, since the low back in March 2020. But looking over, over the coming the full year, I think I'd probably highlight 3 areas, grounds for optimism. So the first would be US equities. So I mentioned earlier about big tech really outperforming by about 50%. Those top 6 companies from the rest of Nasdaq, let alone other areas of the market. So that's an area which we have been reducing our exposure to a lot of these very highly valued technology companies, and looking to rotate to some other more interesting areas or much better valuations, perhaps with a little bit more of a value tilt. The second area is UK equities. So here, we remain upbeat on the domestic economy. Notwithstanding the disruption we've seen from the virus or the current issue around high energy prices, I think we should remember, that consumers and corporates remain in very, very, strong position. So, we've got high savings, we've got strong labour markets, strong housing markets. We've still got easy, financial conditions. And I think just one final area is the whole area of M&A, which I think, again, we should see quite a bit of excitement in that area, which we have, got some exposure to. And the third area would be around emerging markets. They underperformed quite significantly last year, I think, partly, for example, due to the sort of increased regulation from the Chinese government. But we will work through that. So it's an area, again, for the longer term investor, where I think there are a lot of exciting opportunities, some very attractive valuations. So that's 3 areas of particular conviction for us. That's it for now. Have a good day.